Good morning, hello and welcome. You're with us on Opening Bell and we're coming to you live on the Moneycontrol YouTube telecast. I'm Surabhi Upadhyay. It's a Friday morning and we have a very interesting setup as we look at the global cues, and of course there are plenty of earnings to go over as well. Now, skirmishes are still very much on in the Middle East, but markets around the world are looking away. What are they looking at then? They are looking at only and only what's going on with big tech in the US. We've had a lot of important numbers over the last few hours. Markets are reacting. That's of course oil prices, and oil prices are reacting to what's going on with the geopolitical situation, which is not very comforting. And oil is still very much at 88, and yet markets have rallied in a monstrous way. We've had a huge rally overnight on Wall Street, and we've had some astonishing gains across Asia this morning, and all of that has to do with technology. Look at the Taiwan index, it's up about 7%. The Japanese Nikkei 4 to 5%. The South Korean market up 15%. So it's all over the place, and you can see the Nasdaq there. That's where it started, 3% up. So we'll cover that, and of course we'll cover geopolitics. However, the focus for the market today is more on the tech piece than on the geopolitics and oil. Let's get started. Lots of ground to cover. Here are the top headlines. Iran's IRGC targets US bases in Kuwait, Jordan and Bahrain after US forces bombed a building on the country's Qashm Island. Meanwhile, US President Donald Trump says his Gaza border peace has reached an agreement with Hamas for its disarmament. Stocks on Wall Street closed sharply higher, with chip stocks jumping and Microsoft soaring after the tech giant gave a stellar forecast that eased fears about massive spending on AI infrastructure. Markets in Asia mirror cues from Wall Street, all trading in positive. The GIFT Nifty is indicating a higher start for Indian equities. Brent oil prices trade near $89 per barrel as renewed fighting between US and Iran threatens further disruptions to West Asia energy supplies. Gold trades around $4,100 an ounce after rising for two straight sessions, supported by a sharp decline in the US dollar. Infosys CEO Salil Parekh believes that Indian IT story is far from over, with artificial intelligence emerging as the biggest growth driver for the industry over the coming years. In an exclusive conversation, Parekh dismissed the notion that the industry's best days are behind it and said that industry is absolutely alive. He adds that the company isn't slowing campus hiring and plans to recruit 20,000 graduates. An earnings-heavy day with four Nifty companies reporting. Sun Pharma is expected to report a 13% rise in revenue over last year. Maruti is likely to see multi-quarter low margins due to raw material headwinds. For ITC, cigarette volumes are expected to fall 8 to 10%. Also watch out for earnings coming in from Dixon Tech, ABB and GAIL today. Okay, so let's tell you a little more about what's happening with markets, and it's all about, like I said, big tech out of the US. Now, the reaction has been very, very sharp, also because of market positioning. We remember that the Nasdaq has been declining or had been declining over the past 2 odd weeks. So now when the big tech results started coming through, it gave market the reason to believe that all is not lost and things are actually going along quite nicely as far as these big tech giants and AI giants are concerned. So we had Amazon reporting numbers. The revenue was better than estimates. The commentary obviously was quite solid. The stock actually was up 4% while the market was trading, and then it gained almost 9% after hours. Apple up 6%. Again, Apple's numbers, earnings above estimates. iPhone sales surging 22%, and that powered the overall positioning and the overall performance as well. So that was another thumbs up. And then of course Microsoft, like we told you in the headlines, their cloud business has been doing extremely well, and that growth that they've reported with the Azure, that really gives the market a lot of optimism. 16% on Microsoft overnight. Now, with all of this happening, and by the way, all the semiconductor stocks in the US were rocking away. The semiconductor ETFs were up between 6 to 8%. Now, with all of that happening overnight on Wall Street, Asian markets picked up. We've had SK Hynix and Samsung shares rally between 20 to 25% today. I mean, that's what's happened. And since these two stocks comprise the bulk of the Kospi, that index at one point was up 16%. Now it's cooled off a little bit, but it's still up 14%. Make no mistake, I'm not making up these numbers. Yes, the Kospi is up between 14 to 16% today. There was a trading halt that got triggered, and then now trading has resumed. Not just the South Korean market, the Japanese market. I mean, all the chip makers over there, very, very excited. All of that took the Nikkei up 5.5% in early morning trades. Now the Nikkei is up about 4%. So extremely strong sort of a tech play out across Asia this Friday morning. Like I said, oil is actually a little bit on the back burner because the focus is all technology. But for what it's worth, I mean, the prices are still hovering around $89 to $90 a barrel. There was some chatter about Saudi Arabia proposing a naval coalition. They had a meeting, I think, in Riyadh, and a whole host of the countries of the Gulf region, they participated. We don't have any specifics of what this will entail, and in the meantime, those strikes are continuing. So it's more or less status quo with respect to the West Asian geopolitical situation, and oil markets still tracking that, of course, very, very carefully. Now, for us yesterday, again, it was a good day. The market managed to, creep higher. The Nifty managed to close above 24,300. And for the second day running, we had large caps outperforming mid caps yesterday. Mid caps, obviously, it's a lot more about earnings and very, very stock specific. And that's how the day is going to be actually today as well. We have a lot of earnings coming through. We'll just put that plate up for you. The FII numbers on your screen as well. A lot of FII buying actually, which explains the outperformance in large caps over the last 2-3 sessions. And the earnings, tally will come up. Big numbers coming through, and a lot of reactions will also happen. Stocks like Bajaj Finance, the numbers came in almost dot at 330. Tata Steel, Vedanta. There are a lot of numbers that the market is going to react to. So we have a packed lineup ahead. Well, let's get started then. We have Raja Venkatraman joining us on the technicals this Friday morning, and Mayuresh Joshi with us on the fundamentals. Gentlemen, good morning. Great to have both of you with us. Mayuresh, on mornings like these, I think all of us have FOMO, right? All of us wish we had all these semiconductor stocks and these AI stocks in India, because the global move is telling us that this whole party is anything but over. And typically, India is the anti-trade, right? So just your thoughts broadly on what we are seeing, globally, and then we'll, of course, talk about earnings here.
Morning, Surbi. Morning, Raja. No, I think the earnings have been stupendous as far as big tech in the US is concerned. And again, I think if you probably look at how the valuations are probably getting pegged, even with the Micron, as an example, still trades around 6.5 times as we speak. We just spoke about SK Hynix as far as the Korean markets are concerned. That's trading at around 4.5 times as we speak. On a peg ratio, it is trading at 0.3, 0.4 times. So even with the run-up that you probably see, the numbers that they are delivering, it is still extremely cheap as we are speaking. And therefore, I think the entire AI infrastructure built out that is probably happening, whether it's compute, whether it's high memory bandwidth, whether it's GPU, whether it's data centers, the capex that is being spent around it, I think all is happening at a time when earnings are also probably coming through for all these companies. Traditionally, our IT companies have traded at much higher valuations, and with the lack of an AI trade with that. And therefore, I think the lack of AI trade is something that has hurt Indian markets. However, I think in the past few months, because of the outflows that we've probably seen from an FII perspective, as well as the resilience that is probably in the market, and the earnings which have probably come through, I think our markets have remained far more resilient. An interesting fact should be, I think, large caps have delivered decent set, but mid caps, if you probably take market cap above 1,000 crores for a large part of the universe, I think the EBITDA growth for this quarter has been more than 24% on an average, and the profitability growth has been more than 20%. Now, if you are able to navigate the West Asian prices, which a lot of these companies have, and if there is some element of resistance, I think the second half numbers, if they stand out the way probably they are at this juncture, my own sense is that India's resilience might continue. So it might be a sector and stock specific approach that markets will do well. Just to sign off, I think just the Durandar dialogue for the mid cap stocks that has probably happened. Hosla rakho, Indian bharo, or badla lo.
All right. So really in the Friday mood, Mayuresh, this morning thinking of Dhurandhar dialogues and all that. Nice one. So you need what? Hosla, Indhan and Badla or something in that order, I guess. I get your point. Speaking of Badla, Mayuresh, very quickly, while we're talking about this mega global AI trade, and it's not ending anytime soon, as we've seen what you also said. What do you make of incredible buying in Indian IT? This week, the Nifty is up to 2.5%. It's been a decent week so far. The Nifty IT index is up 8%. And every single day, these large cap IT stocks have seen buying. What do you think is going on here? And, I don't know if you've been a participant in this week. And what's your sense?
No, we're not even participating. Obviously, we want to wait out for one more quarter to see how this entire global AI trade shapes up, what kind of disruptions happen specifically when it comes to applications and the agentic AI deployment that a lot of global majors are probably doing. Having said that, I think all three factors probably played out for the IT sector as well. I think there was a huge jump up in prices, as I said, even if valuations were cheap for most of these AI built out stocks. Then over the last few days and the last few weeks, there was that fear of a bubble being created, whether the AI capex spend was, anticipated in a fashion where I think they had exceeded spending rather than demand coming in. And I think you did see a sell-off in those stocks that probably happened, which gave a boost to our stocks as well. And a few outliers within the mid-cap IT companies that reported numbers, whether it's the Coforge to a certain extent or Persistent. It had got beaten down simply to a large extent, and therefore I think there was some element of value buying that probably came through. But in my own sense, I think the sector will still remain range bound. No structural declines on the downside, but no significant upside. I think it's still going to be a time and price consolidation for the sector after the move that we've now probably seen in a month.
Okay, all right. So that's on IT. Let's go to Raja as well. Raja, what's your sense? And how have you read the week? It's been a good one. Like I said, Nifty itself is up 2%. Renewed interest in IT stocks for what it's worth. What's your read through and what's your trading stance and positioning for today?
Yeah. So, good morning, Surbhi, and good morning, Mayuresh. When you take a look at what's been happening over the last few months, we have been seeing that the Nifty has given a very stable closing towards the end of the expiry. And if you have tracked, one of the key metrics which we track is the FI selling. Over in March, it was closer towards 1.22 lakh crore. Then it boiled down to 70,000, then 55, 49, and 9,000. So the FI selling has continuously reduced over the last 4 months. So which is a clear indication that there is a growing interest now back once again on the buying side of the Indian market. So which we have also been discussing about the FI closing at the end of the day on the buy side. Now, what is happening because of that is that over the last few sessions, we have seen that the Nifty did dip down. It dipped down into the crucial support zones around 23,800, which we have been discussing, which we have been also sharing with our viewers. And from there on, the revival has been quite swift. Now, what we had discussed in the last week was a closing about 24,100. And now with that being achieved, the next level was 24,300 and then we have 24,500. So step by step, these levels have been achieved on a continuous basis. And one of the key reasons for these levels to be achieved, I would say, is the IT sector. If you recall, last 2 weeks ago, I said that I would put my neck on the line and say that IT is a sector to get into. And it has come out really quite well because you can see that all the IT sectors are performing and all the IT stocks are actually delivering better than the other sector. So this is a clear indication that the IT sector is doing well. IT sector is supporting the indices and it is ensuring that the market stages a revival. Now, if your question is whether I should buy into IT, answer is yes, but on a decline. And some dips, IT should be bought into. But then overall, you can see that the Nifty and Bank Nifty are just getting started. So you can see that the broader indices are in tandem. So as per Dow theory, now all the indices are in tandem. And we can see here that the overall structure is also improving. Yesterday, Bank Nifty finished at the high. And Nifty was also giving an indication. So overall, you can see that on a Friday, we are going to open with a slight gap up. But now what will matter today is how we close. So 24,500 is a very important level, which I would see at the end of the week to exceed on the Nifty spot. If that is exceeded, then we are in for a great run in the coming week. So we have the Bank Nifty firing in, we have the Nifty firing in, we have the IT firing in. So overall, you can say your favorite line, thank God it's Friday. But then I would say that we are just getting started.
lots of other stock ideas, also more earnings analysis because we've had so many numbers after market hours yesterday. So let's straight away get started. I'll go in sequence, go in parts with the big ones first. Let's look at Bajaj Finance. It seems to be another steady quarter by the giant. Profit is up 27% at 5,986 crore rupees. Net interest income up almost 23%. The growth in new loans at 20% and the AUM growth is at 24%. AUM now almost coming close to that level of 5.5 lakh crore rupees at the end of the first quarter. The asset quality has been quite stable. Gross NPA ratio is very much below the 1% mark. The company also, by the way, said that it is expecting lower credit costs for the rest of this year. It is seeing better collection trends in unsecured loans. And it at some point could revisit the guidance as well on AUM growth and ROA if the macro support of the second half indeed turns out to be better. So that's Bajaj Finance. Let's go to Tata Steel now. A slight mixed bag over here. Revenues above estimates. Profit was slightly below the CNBC TV18 poll. EBITDA per ton was above estimates and looked actually very, very strong at 19,162. And this was largely driven by the India business. The India EBITDA per ton is again above estimates at 18,198. The EU business is still sort of dragging a little bit. The EBITDA per ton there is a negative $16, which some will argue is a little above what the market had in mind. So we'll see how this plays out. Overall EBITDA growth of 24.7% coming in and overall margins at 15% versus 14%. There's a large capex that the company announced. Tata Steel has approved a capex of almost 34,000 crore rupees. This is for 4.8 million tons per annum steel capacity expansion at Neelachal Ispat. So that's Tata Steel for you. Vedanta from the metal space as well. Let's quickly go over these numbers. Of course, the large part of Vedanta's earnings are derived from the performance at Hindustan Zinc. So the profit is looking actually quite good quarter on quarter, almost 5,300 crores versus 4,260 odd crores. Revenue has been flattish to slightly negative, 1.6% lower. EBITDA is up 13%. And EBITDA largely, driven by the performance of Hind Zinc. Margins for Vedanta stand at 35.1% versus 30.7% quarter on quarter. So, largely seems to be pretty okay thanks to the Hind Zinc performance. I'll come to the other stocks in just a bit, but Mayuresh, first let's go over some of these bigger names. Bajaj Finance, what did you think?
I think a decent set. And again, I think the loan growth was largely in line with estimates. But again, the expectation largely getting built in is that as things ease out over the next few quarters, there's a very strong balance sheet that they're going to get with better capital adequacy. I think the calibrated approach that they're probably deployed so far should probably start paying fruit as we head into the next quarter. I think Bajaj Finance has probably stood out. In fact, a lot of NBFCs could be reported better than expected now.
Okay. Would it be a buy for you? And if one were to kind of decide between key NBFCs, Shriram Finance, Bajaj Finance, Chola, I mean, the top of the line ones, then what is your order of preference, Mayuresh?
Shriram and Bajaj as a disclaimer, I think is something that we own should be in our total portfolio. So I think a little bit biased.
Okay. In the metal space, Vedanta, Tata Steel, what do you think of the performance? Any interest in these stocks as of now, Mayuresh?
I think it's still a wait and watch. I think it's a very obvious reason. I think what's not being happening from a macro perspective is still something to be played out on these stocks. Obviously, global demand, domestic demand might probably be more robust compared to what the growth is probably at this point. Never really know how China is probably behaving and reacting at this juncture. Probably on a global scale. And because of the uncertainties that we probably see because of the prices, LNG prices have remained very, very high. So that aspect, I think, costs remaining for the demand expected to remain a little bit under the sun. I'm not really sure how the next 2 quarters will be. Our belief is that it's a wait and watch approach. Probably assume how these global macros probably play out.
Okay. All right, got that. Let's quickly run through some more of the big earnings, and then we'll go back and get a technical check with Raja as well. Swiggy, of course, is going to be a name that a lot of people will watch out for. Another performance has not been as hot as the accumulation that we've seen in the stock in the last couple of sessions, and that could turn into a bit of a disappointment. So there's still very much a net loss, 791 crores. It's of course reduced year on year. Year on year, they were almost at a 1200 crore loss. Now they're at 791 crores. Sequentially, it's more of the same. I think they were close to 800 crores of loss in Q4. Now they're at 791 crores. So that's point number one. Revenue is up 37%. The EBITDA loss is at 650 crores versus 945 crores year on year. So again, year on year losses are coming down. Sequentially, it's more or less stable. They were, of course, at a loss in Q4 as well. Now let's talk about the individual businesses. Food delivery, there's been some sequential moderation that we've seen in in the way the margins are shaping up. So the contribution margin and the EBITDA margin, both of them are down 20 basis points quarter on quarter. The contribution margin is 7.6% and the EBITDA margin is at 3.1%. The food delivery GOV, that showed a growth of about 17.4% year on year and 5.4% quarter on quarter. So steady growth, margins slightly sort of under a little bit of pressure, you can say. Now let's talk about quick commerce and what's happened with Instamart. Instamart, the company says, achieved contribution margin break even in May. The GOV is flat quarter on quarter, which may be a bit of a disappointment for some sections of the market. It's up 40% year on year. But the fact that GOV has been flat QOQ, let's see how the market digests that. So that's Swiggy. Thermax is another one, and it's been a really disappointing quarter. I mean, all out disaster really for Thermax. Net profit down 83%. Revenue is up 6.7%. Look at the EBITDA. EBITDA has fallen almost 70%. The margin is at 3% versus 10.4% year on year. This is probably one of the multi-year lows margins at 3% for Thermax. The company says it had lower export sales. The order inflow has been, very, very anemic, just 2% order inflow or growth in order inflow this quarter. The total order book stands at 14,045 crores. So we'll see what the reaction to Thermax is. And then there is Mazagon Dock, another large mid-cap, which the market has a lot of interest in. Steady quarter for Mazagon. Profit up 21%. Revenue up 12%. Strong growth in EBITDA, 48% growth in EBITDA. And margins improving quite a bit for Mazagon, 15.2% versus 11.5%. And the order book is around 18,200 odd crores. Of course, we're waiting for the submarine. Those are going to be the big game-changing orders. The P571, I think, submarine orders that are supposed to come in for Mazagon. So that's pretty much where we are. Since we're on Mazagon, since we're speaking about a defense stock, just one more name, Astra Micro. It's not earnings, why we're looking at this stock. It's more to do with the huge order that they've bought for HAL for radars. They've won this order from HAL. The value of the order is 2,205 crores. I'll definitely watch out for how Astra Micro reacts. Okay, Mayuresh, quick fire on this. Defense, we've seen a lot of companies. BEL was a disappointment. The stock kept selling off 2-3 days after the results as well. What do you think of something like Mazagon, Astra? This is a big order win announcement today. So just your thoughts on and what you're liking in defense.
I think generally, as I said, it's a structurally strong story over the next 3 to 5 years. With strong order books, the expectation largely is that the margin should sustain because margins are pretty decent on the orders that they are probably executing. Now, there will be a quarter in a year where I think execution will probably a little bit of a lag, or where receivables probably come with a lag as well. Therefore, you might see hospitality from a short to medium term perspective. Although from structural perspective, I think that sector still is quite a good growth. Right? EL and solar industry is something that we continue liking from a rating and ranking perspective. So the sense is that they are strong leadership stocks with all the attributes that I just spoke about. But the expectation might be that exit FY13 upwards, I think will be far different for both these companies. It's better for the moving to operating leverage and relatively stronger ROE there. So EL and solar industry is collectively and going.
Okay. And Mayuresh, very quickly, Swiggy, are you only ordering from the app or are you willing to order the stock into your portfolio?
So I think I'm in the other camp, Surabhi. I think I go out and I buy. So I think the orders do come in, but not for mine. But yeah, I think disappointing set of numbers. I think what the street probably believes that at some point of time, there will be some incremental expectations in terms of EBITDA loss getting purchased. That is probably not happening. I think Blinkit or Zomato probably has reported a better set of numbers consistently as far as these quick commerce players are concerned. And let's not forget, I think competition which is expected on Amazon that might crimp margins even more. So yeah, very soft set what we get.
Okay, and Mayuresh, before you let us go, I mean, the Thermax being such a big washout, these power and capital goods companies, they have been the toast of town, right? Everybody in the market talks very highly about them. But I don't know whether this is a 1 quarter off or, what went, what went down. Your thoughts?
No, I think the margin performance has been disappointing to say the least, so and therefore I think the reaction will be a little bit harsh as we speak. But yes, again, there are tailwinds for the sector as a whole, as I said. There are massive infrastructure spends that are probably happening and are expected to continue over the next few quarters. Like defense, I think the margins that we see orders are coming are pretty reasonable as well. And the companies are executing well. So I think it seems what has happened in this quarter, whether it's a one-off or whether there will be some weakness going forward. Looking at the numbers, I think there might be an immediate reaction on this.
Okay, all right, Mayuresh, let's see. Well, knee-jerk reaction for sure. I can already see the pre-open session has started. Thermax is down 8%. We'll see what actually happens in the market opening once the session opens up. But thank you very much for running us through a breathless list of earnings reactions. It's that kind of a morning. You have a good day and wish you a good weekend as well. Thank you.
This will be always a pleasure. You have a great weekend. And Raja, you too as well. Thank you.
Thanks for that. Okay, Raja, now let's look at these stocks from a technical and trading perspective and what to do with them. So I'll start with Bajaj Finance, Raja. It's done well this week, 6-7% up this week. Stock is at 1,080. Nothing wrong with the numbers. In the pre-open, it's up about 2.5%. Do you see a trade here?
Yeah, when you take a look at the NBFC, right, the NBFC space has definitely been propping up, largely due to some promising measures seen in Bank Nifty. And we can see that the Fin Nifty index is also started reviving. So all that put together, I would say that from the stocks that we discussed, I would say that Bajaj Finance holds a better standing, and now it's going to test its former highs closer towards the 1070 mark. So I would say that I would need it to cross these certain levels, because if it crosses 1070, then it opens up a whole new avenue for Bajaj Finance. So yes, you can be a buyer above 1070, because at that juncture it would actually clear a lot of resistance out there. Now with the positive kind of results also coming through, so all that would act as an encouraging tailwind for the stock. So amongst the NBFCs, I would prefer Bajaj Finance.
Okay. What about metals? Tata Steel is also opening out positive, 1% higher. I can see some move on Hindalco as well. Is there any trade in metals, Raja? And if yes, then which stock?
Yeah, the metals over the last few sessions have been largely beaten down. I would still be a wait and watch in the metals names, be it VDL, Hindalco, Tata Steel, because there's still going to be some time since the recovery has in play. So now once it recovers and once we get some kind of clarity on the war scenario, I would not be a buyer in the metal names. So I would hold on and observe them. It will definitely be on the tracking list, but I would not like to venture into either trading or investing.
Okay, let's do one thing. Let's pull up Swiggy. Swiggy is down 2%. Not bad. Considering the numbers aren't too hot and the stock has already run up quite a bit. Swiggy's been seeing a lot of accumulation this week. Stock's up 15% this week. So that's not something to really ignore. 290 on this one. Right now it's down about 2%. What do you think of these two, Swiggy and Eternal? And would you prefer either one?
Yeah, the quick commerce space is definitely very buzzing. So last week we had discussed Misho, and today we are taking Swiggy and Eternal. So yes, among the quick commerce space, Swiggy has been facing not encouraging numbers over the last 9 months. The stock has gone through a lot of pain, and I would say that over the last quarter, the stock has done good accumulation, like you mentioned. And I would say that this could be a good time to consider that, once it has hit some decent support levels around 240 levels, I would say that this could be a good stock to add to your portfolio. Of course, Eternal is always the street favorite, and I would say that Eternal also augurs well. And between Eternal and Swiggy, I would prefer Eternal. But then, if there is a question asking whether this is a good time to enter Swiggy, the answer is yes.
Okay. I'm just going over more and more result reactions to see what stocks could be outliers today. On the upside, Astra Micro. Remember, we were just discussing this big order that they've got from HAL for radars. Stocks up 7%. That's Astra Micro. Yesterday, of course, MTAR had a good session, good earnings, and the stock got a thumbs up from the market. Mazgaon is up about 1%. Garden Reach Shipbuilders is up about 1%. So these are interesting names. Astra specifically, Astra and MTAR, some of the smaller defense stocks. Raja, what's your advice?
Yeah, these defense have a very important area of addressal, which is their capability to handle these orders. So a lot of movements happen on these orders, and the knee-jerk reaction happens, and after that, the stock actually does not move anywhere. So it has happened with HAL, it has happened with BEL. Now, when you see Astra Micro, yes, there is going to be again a swift move, and the stock has been sustaining the upward momentum. So yes, this is a stock which you can consider because it's now coming to some decent set of supports around 1700, and with this order flow in play, I would say that this could be a good stock to consider as part of the defense play.
Okay, all right, got that. Let's just look at what else is making headlines in terms of earnings or news flow. Thermax, we have to discuss, Raja, for sure. I mean, people who are invested, even investors who are in the stock, they'd be quite worried. It's just under 3,400 now, 8.5% decline. So, what would your advice be to both, to traders, to investors? Is the dip a good buying opportunity? What to do with Thermax?
See, the overall view, Thomas definitely had a very good run since in this entire 2026. The best run, I would say, in the last almost 2 to 3 years. But now, considering these kind of news flows, there is going to be some sharp profit booking that is going to be visible. So, at such scenario, when the news flows is also not encouraging, it's best to look at other opportunities. So, my call would be to exit this current scenario and not look at the dips to buy into.
Okay, all right. So that's Thermax. By the way, Data Patterns is another stock. It's fallen 7.5%. Numbers haven't really kept pace with the excitement that we've seen in the stock this year. Data Patterns is quite a story. Yeah, right now it's down 7.5% in pre-open because of the earnings. There is a pressure on margins. Margins for Data Patterns have slipped from 32% last year to 27%. Market does not like that. EBITDA is also slightly lower. Let's pull a one-year chart on Data Patterns. This is an interesting stock. It's gone up, I think, over 50-60% in the last 1 year. A lot of that gain has happened in 2026 itself. And then comes a disappointing quarter. Market just doesn't like it. Let's pull a long-term chart, one-year chart of Data Patterns. Levels to watch on this one, Raja?
Yeah, data patterns, yes, definitely. It may not be encouraging, but then the kind of movement it shows and the kind of sector which it is in, the dips have been continuously been used to buy into. So overall, you would see that yes, structurally the stock is in a positive territory, and these kind of reactions are part of the regime. So I would say that the dips in this particular stock should be definitely used to buy into. And the levels I would track is closer towards the 4,000 levels, and where it could offer me a good support zone where I can consider it as an investment opportunity.
Okay. Raja, finally, then let's come to the overall trading advice. The pre-open session, by the way, has settled down. Nifty is up 44 points, so slow and steady. That's been the story of this week, actually. We've gradually, slowly and surely, reclaimed levels above 24,000. The markets managed to, move out despite that rise in oil prices, despite the volatility in oil prices. So it's been a good week, and large caps have led from the front. So 44 points up, by the way, on the Nifty right now. Mid-cap index today, actually, in the pre-open is looking even better, up 0.3%. So, Raja, let's revisit the trade. On the Nifty, on the Bank Nifty, is there any trade? And, of course, your individual stock ideas as well.
Yeah, sure. So first of all, when you talk about Nifty, Nifty has definitely been holding on over the last few trading sessions, and they have been moving up the step, right? About 24,300. The next door opens on the Nifty spot to 24,500. So one can consider to go long. I would say wait for the first half an hour of the day, and then once it moves above the first half an hour of the day, then I would say that it could be a good opportunity, or use dips towards 24,300 as a dip buying opportunity, because that also acts as a good support. So overall, it's a buy post 30 minutes, or if there is a decline on some profit booking on the entire week which has transpired. So any support levels towards 24,300, 24,250 would be a good area to consider on the long side. So overall, structurally, it's looking encouraging. And on Bank Nifty, I would say that Bank Nifty is still in a consolidation mode. So I would wait for some more cues to emerge on the Bank Nifty. So between Nifty and Bank Nifty, I would be a buyer on Nifty.
Okay, all right. Got that, Raja. Thank you very much for giving us all the trading advice and all the stock-specific, advice as well today. You have a good session, and we'll connect again soon. Thank you.
Thank you, Cynthia.
All right. Well, we're set to kick off Friday on an optimistic note. It's been a good week so far, but watch for IT. A lot of IT stocks are weak in the pre-open session, and I think profit taking is going to be the order of the day, at least in the morning, given the huge run-up and given the fact that globally the AI trade and the semiconductor trade is still going very strong. It doesn't show any signs of tiring out. So maybe as we get into the weekend, some profit taking. At least that's what the pre-open session is indicating. Bajaj Finance has been one of the best performing stocks of the week, and it continues that winning streak after numbers came in very, very steady. Nothing to really complain about on those Bajaj Finance numbers. So that's the best winner on the Nifty right now with a gain of almost 4%. So let's get started. Bell's about to go off, and here we go. 50 to 60 points up on the Nifty. Steady 0.25% gain coming in at the open. Midcap index is completely flat for the time being. Bank Nifty is up about 0.3, 0.4%. Okay, now the Nifty is giving up the initial opening, tick momentum that we saw. 20 points up, so a little more quiet. Sensex is already flashing a little bit of red. Okay, so yeah, it's flat to sort of caught in a very tight range. At least that's what the index is doing right now. Let's look at individual stocks. Like I said, Bajaj Finance has been the hero of the week, and the results are only cementing its position. 4% up on Bajaj Finance. It's the big leader on the Nifty right now. Let's get the Nifty gainers up for you. In fact, even Bajaj Finserv is reacting, in tandem. 3.5% up on Bajaj Finserv. Finance is up 4%. Eternal has had a very, very strong week. Eternal, by the way, is the best performing Nifty stock this week. It's put on almost 12%, and throw in another 1.5% this morning as well. So it's been a solid week for Eternal for sure. What else? I can see some green on a Shriram Finance, on a Mahindra and Mahindra, on a Geo Financial. There's some gain on metal names like Hindalco. Tata Steel, which is reacting to numbers, is also up about 0.5%. BEL, Sun Pharma. So, these are some of the stocks that are tracking early momentum. The Bajaj twins are the best of the lot. Bajaj Finance and Finserv doing really, really well this morning. So that's what's playing out. L&T seeing some follow-through buying. Axis Bank is up about 0.6%. State Bank of India is up about 0.6%. ICICI Bank is seeing some green. So thanks to the fact that these larger banks, at least they're up 0.25% to 0.5%. I mean, we are seeing the Nifty not slide for the time being. Even Kotak Mahindra Bank has a little bit of green around it. Reliance is chipping in 3-4 rupees as well on the bulls side this morning. Some gains coming in on RIL as well. Nothing much, but some gains coming through. Okay, on the flip side of the screen, like I said, IT is seeing a lot of selling. IT is down. Infosys, HCL Tech, TCS, Tech Mahindra, all of these stocks are down quite a bit, 3.5%, 3%. So there's profit taking after what's been a strong week for the IT names. Tata Consumer, Adani Ports, Eicher Motors, all of these stocks are lower quite a bit. So this is how it's playing out for the time being. That's the trend, at least as of now, that we're seeing on the large cap space. Okay, now let me quickly come to the newsmakers in terms of earnings. Let's get to the individual stocks. Look at Thermax. It's the accident of the morning. Ouch. 15% down on Thermax because of those numbers being so disappointing. EBITDA margin coming down to 3% versus 10%. I mean, a little bit here and there, I think the market can digest. But What Thermax has posted a near 75% drop in EBITDA, margins collapsing. The result is on your screen, 15% down on that stock. The other accident is Data Patterns. It's down about 7%. Swiggy is down 4.5%. Like I was saying, that a lot of people would not be happy enough with the pace of growth, particularly in the quick commerce business. Food delivery is still okay, but quick commerce, the growth numbers are not, as robust as what the market would have perhaps liked to see. And that explains the disappointment on Swiggy. Also positioning, the stock had rallied so much going into earnings. Can we quickly change these stocks and move on to the others, please? Let's show Data Patterns. Let's show Swiggy. Swiggy is down 5.5% right now. So these are some of the stocks which are under pressure as we speak. Global Health, Medanta is down about 4% as well. So these are the earnings disappointments. Now let me see what's happening on the upside. Astra Micro, this HAL order, it's really got the market excited. It's a 2,200 crore rupee order for Astra Micro from HAL for certain radar systems. And the stock's rallying, running away 13% higher. Hyundai Motor, actually the quarter was pretty, lackluster for Hyundai, but I think the commentary about the future is, is more promising. Stock is up about 7% as we speak. Aarti Industries came out with a very strong quarter. Aarti Industries has seen a 5% up move this morning. So those are some of the positive result reactions coming through. Hyundai, Aarti, and Astra Micro because of the order win announcement. So, that's the stock of the morning on the upside. Yeah, so those are some of your newsmakers coming through. Let's see what's happening. Yeah, Astra is a big one, up 13%. Let's see what's happening with the overall gainers and losers tally. Let's get the mid-cap gainers up on the screen. So Hitachi Energy is doing well. CG Power is doing well. Thermax is down quite a bit. Maybe there's some money shifting away from Thermax to some of the other power equipment makers. That's one way of maybe looking at it. CG Power is having a really good morning. And Hitachi is also, up. GE Vernova, TND, 4% higher. So a lot of the other power equipment stocks are doing very well as Thermax crashes almost 15%. That's an interesting mix that's playing out today. The other gainers on your screen, Polycab, Ashok Leyland, Cummins, all of these stocks up and about. And Hyundai is quite the high flyer, up 7% on Hyundai Motor. Let me just go back and look at some of the details on Hyundai's numbers and see what it's done, because the quarter has been fairly, quiet. But I think it's the con call. For full year, the company is still maintaining its volume growth guidance of 8 to 10%. They say they're confident of achieving an EBITDA margin of 11 to 14%. So they're still sounding very optimistic on the second half. They're saying we'll outpace industry growth in H2 and improve our exit market share from 12.3%. Which was at the end of FY26. So I think maybe it's that confidence in the commentary that's powering Hyundai. The other gainers, of course, are up on your screen as well. So that's where we are at. Okay, so that's the market for now. Let's do one thing. Let's take a look at some of the broker calls. Market's very flat actually on the Nifty level. Nothing much is moving. 25 points up. It's more about individual stock reactions. The one trend of the day is a sell-off in IT, and you can see that in some of the mid-cap names like Persistent. Also on the large-cap side of the screen, just watch out for all the IT stocks. They've had such a good rally, and today is a day of profit-taking. Down 3.5% on TCS, 3.5% on Infosys, HCL Tech, Wipro down 2.5% to 3%. Tech Mahindra is lower. Let's quickly move to other stocks. The Nifty IT losers, or the Nifty losers or the IT losers. It'll illustrate the point. Let's also do one thing. Quickly check out what the brokers are saying this morning. The buy and sell, trades and ideas that are coming up, and then we'll pick it up with our market guest on the other side. All right, welcome back. So those are some of the broker reports and the commentary that we're getting this morning. Otherwise, it's a quiet Friday, at least as of now. Nifty's up 35 points, but it's been a good week. We've gained almost 2.5% on the benchmark index this week. Good time to bring in our next guest to get some wider perspective on this market. Trideep Bhattacharya, Chief Investment Officer, Equities at Edelweiss AMC, is now joining in. Hey Trideep, good morning. Great to have you back on Moneycontrol.
Very good morning. Thanks for having me on your show.
So Trideep, we're muddling along, I guess. I mean, global cues are as confusing as they are. The AI trade is still on. And I think it's been all about earnings. So let's just, get your broader sense on the market. I remember Trideep and I were doing a conversation on markets over coffee a couple of months back. And Trideep had mentioned to me at that point in time that keep the faith in mid-caps. There is a lot of potential for growth in the broader market in this country. So Trideep, let's start there perhaps. Are the mid-cap earnings keeping pace with those expectations?
Absolutely. In fact, I would actually argue that if you look at the June quarter result season, while when we met, I set an expectation that driven by higher oil prices, June quarter will see earnings downgrade to the tune of about 2 to 4%. But as it turns out, I think the numbers that have come about goes on to show that demand has held up relatively better. And this was a tough quarter because the average oil price that the companies were dealing with in this quarter was $97, whereas the spot price has been anywhere between 75 to 85, let's say. So meaningfully higher numbers, meaningfully higher headwinds to deal with, and it's just crude oil, other commodities were also there. But demand on the other side have actually despite the price increases, have held relatively better. So I think on a bottom-up basis, what this shows is Indian economy is in a fairly good shape. And as a flow through of that into mid and small caps, the numbers also reflected of the same.
So, Trideep, let's, get a little more granular into where you're seeing that demand resilience really show up. I mean, there have been some accidents here and there. Like this morning, we're talking about Thermax down quite a bit, margins collapsing. So it's always going to be mixed. Swiggy expectations were, I think, running ahead in terms of growth. And then the stock prices had also run up quite a bit. So individual names here and there. But if we broadly talk about demand resilience and earnings growth, then which are the pockets that are looking the brightest to you in the mid-cap space?
So first, I would point to segments that are typically high-end consumption. I think high-end consumption has held up, stroke retail has held up reasonably well during this month. And I'm talking about consumer discretionary here. If you look at the auto numbers that have come through for the last quarter, and particularly through this West Asia crisis-driven quarter, I think numbers have held up quite well from a volume perspective. I also think that if you look at jewelry demand, if you look at overall high-end retail stocks, anywhere between 15 to 20% growth has been fairly kind of robust, which is good to see. The second is basically on the financials, mid-cap financials, so to speak, in terms of credit growth that they have displayed in the results. The credit or the loan advances growth has been anywhere between 18 to 25%, which is a sign of a fairly robust demand outlook from that perspective. So that will be number two, or the second area that I would highlight. And the third area that I would say is that overall, if you look at in terms of the so-called QSR and those areas, that has also relatively held up reasonably well, even though they face some disruption driven by gas and whatnot. So net, I think versus expectation, I thought consumption held up relatively better. In other places, like in capital goods, the leading EPC player, they came up with their numbers. They also kind of, the order book turned out to be better than what people feared. So a combination of genuine demand being better on the consumption and not as bad as feared on the capital goods is broadly makes me feel positive.
Okay. On capital goods, let me take that up, Rudy, because I remember that's a part of the market that you've been optimistic on. The power chain within that. Also, just revise for us what part of that chain do you like? transmission, or the equipment makers, the capital goods guys, here the stocks have also run up quite a bit. So again, it's really important to understand whether earnings are able to meet those elevated expectations and the valuations.
Yeah. So I think some of these have sort of had an AI flavor to them, which have subsequently corrected, given that a little bit of sheen is coming off the AI trade, something that we talked about when we met last time. But our ideal hunting ground within capital goods are companies that supply nuts and bolts to the power supply chain. And not just power, I would say power and oil and gas. These are two segments where I think from a top-down perspective, India would focus a lot over the next 3 to 5 years. Diversification of power from pure traditional sources more into renewables, and also energy security as in other alternate sources of fuel. These are the two broad themes that will play out over the next 3-5 years. So in capital goods, companies that supply nuts and bolts will see better days ahead. And that's where our holdings are. Have they met expectations? We were oriented towards companies that got impacted by the West Asia conflict. So they didn't do well heading into the numbers. But once the numbers came through, it were slightly better than what people feared. So net, yes, better than feared is the best way I would put it in an impacted quarter.
When you say, Tradeep, that for capital goods, the nuts and bolts providers will do well, what kind of companies are you talking about? Are you saying that it's perhaps best to stay away from the very large equipment providers, those big HVDC lines and, top of the line, big equipment makers? Many of them are, big MNCs as well. So you're saying stay away from them? Then what's nuts and bolts?
Nuts and bolts could be kind of, without getting into stock specifics, would probably be, for example, companies that supply turbines, companies that supply maybe conductors or cables, and those kind of spaces where they supply nuts and bolts into the power supply chain. And the thinking behind that is that they have the best pricing power as opposed to the large equipment makers overall, simply because that this is a small part of the overall value chain, and usually driven by commodities. Whenever there is pressure, they are able to pass it on better than the larger ones.
Okay, got it. That's quite helpful. So, capital goods, but select. In consumer, Tradeep, like you mentioned, there are a lot of the companies, especially discretionary consumption, the trends are holding up well. That's a large pie again. So, where do you see the maximum bang for the buck, as they say, in discretionary consumption?
Positive on auto, particularly auto OEMs. We think that there's a lot of pessimism built in on commodity prices impacting margins. Some of them have impacted in the current quarter, but that's transient in nature, as in the subsequent quarters they would sort of rebound. Also auto ancillary. So autos in general is one spot that we are positive on. And as I said, luxury consumption, luxury retail, jewelry are the few areas that we have our holdings on. And I also talked about the mid-cap financials. Those are the areas that we would kind of populate a good part of our portfolio into, apart from other niches like hospitals and likewise.
Okay, got that. Now let's talk about large caps, Pradeep. How can we not? I found the whole IT situation very interesting this week. Actually, not just this week, last 1 or 2 weeks, because large cap Indian IT stocks started seeing some accumulation from the lows. And that was very evident this week. The index was up 8%. This morning, there's, of course, profit taking happening. And just juxtapose this with what's happening globally, because some of these big numbers that came in overnight, they're telling us Amazon and Microsoft, they're telling us that this AI semiconductor story is nowhere close to getting over. And we saw what happened with the NASDAQ and with some of these Asian chip stocks this morning, right? So just tell us what's going on in technology. What is your read-through of the global trends so far? And if the AI trade is not breaking, the AI build-out trade or the infrastructure trade, then, is there any sense in looking at the Indian IT services part of the business? Because again, many of these AI giants, they're putting their forward deployed engineers themselves. So, things are still very confusing with IT. What's your read through and what's your positioning now on the index, on the sector here in India?
So my positioning is broadly neutral, and I would say divided into two components, like when we spoke last time as well. That valuations in the case of IT services companies have reached a level which I think are fairly attractive. And we can't rule that out. Valuations are one of the most important parameters to look at in investing. And I would say valuations are interesting from that standpoint. Earnings estimates have stopped being cut. And these, as a combination in the last result season, made their share prices rebound by about 10 to 13% is what we saw. A lot of it was short covering, but it also wakes you up, or people who have been very negative, that ultimately the bottoming out of a sector might be there around the corner. Now, has it bottomed out? The answer is probably not. I think it's a transition. It will take about 2 to 4 quarters for the earnings to start bottoming out and then rebound. We have to sort of wait that time through. So that's the way we are playing the IT services. And when we spoke last time as well, I said that we are kind of marginally neutral, marginally underweight to neutral, but not very negative. That's from the portfolio standpoint. On your broader AI question, I think clearly AI is transformational. There is no doubt about it. But the valuations of some of the stocks that we have been seeing, whether it's in other emerging markets like Korea, Taiwan, have really gone through the roof. And I've been talking about it for the last 6 months about it. It's not that AI is going away, but these valuations, as we have seen time and again in various different tech cycles, whether it was Y2K, whether it was package implementation, or many different cycles, that valuations have probably crossed the crescendo there and crossed the nadir here. What you are seeing in the last month or two is a little bit of valuation rebalancing happening as the fundamentals kind of move forward from there. So we are neutral right now in tech. Overall, not overly not overweight at this point in time, but we are mindful that valuations are quite attractive.
Okay, all right, got that. Tradeep, that brings me to the larger question on the market as a whole. Today we started with the micros and now we're coming to the big picture, right? So zooming out, I was just looking at the flows picture, FPI flows. Right now in front of me, I'm looking at the depository data. So as July ends, it's 31st of July today, we're actually net positive. Finally, after many months, we're net positive $1.6 billion in terms of inflows coming through. And this is after March, we started seeing the outflows. March, April, May, June, all of it was negative. Now at least some trickle has come back. But Tradeep, that's the larger question for India, right? While of course the domestic money here that that you and your peers are managing, that's ensured that the market doesn't break a certain level. There's always buying at lower levels for good stocks and good companies. That good feeling wala market, as they say, right? Where the wealth effect, what we had towards the end of September 24, that feeling hasn't come back. So given the global positioning and what FPIs are doing, I don't know if they'll diversify away from the AI trade or not, but what's your read through? We need their participation as well, right? For that strong market to come back, don't we?
We do, probably. I would say that, over the last 2 years, India was the anti-AI trade and anti-oil trade, and both of them were bane for us because that caused FII outflows. I think over the next 1 to 2 years, these two trades will actually reverse. If you look at oil, while the spot oil prices have been anywhere between 75 to 110, 1 year forward oil prices show that we are in a heavily supplied oil market, where anywhere between $75 to $85 is what they are talking about. And India being a big importer would be a beneficiary of that. Second, India as a market and IT services within that have gone nowhere in the AI trade over the last 1 to 2 years, while some of our regional counterparts are up meaningfully. As that starts to reverse, both of these from a FII flow standpoint, I would say will actually be positive relative to global emerging markets. So if I were to count out a view, I would say definitely positive on India relative to global emerging markets. But for the animal spirits, like you said, to come through globally, not just in India, we will need to get this meddling of economics and politics, which is happening driven by the United States, come to some sort of a standstill. Whether it is tariffs, whether it is basically the West Asia conflict creating a sort of volatility in oil prices, what they do is impact global trade. And while there are buffers in and across global trade, at some point they're going to give it away. So for animal spirits to really kick in, we need that sort of problem to solve itself coming through. Quite frankly, on that count, I am not positive. I think we will continue to be a bit of headwinded on the macro standpoint emanating out of US and West Asia, and positive on the bottom-up standpoint. So we'll see probably flows relative to other markets. Absolute terms, our upside would be a little guarded given that those animal spirit, global trades, etc., are not coming through.
So when you say the issues impacting the animal spirits, you're saying the policy action from the US, is that the headwind you're talking about?
Absolutely. I mean, if you look at global trade, ultimately global equity market multiples are driven by how free global trade happens. And that drives the lower cost of capital, that drives better business fundamentals and better margins, better profitability for companies. If different countries around the globe have tariffs quoting at different levels, some anywhere between 10 to 30 to 40%, and at points in time being called as illegal, then from a businessman standpoint, if you stop by and think, the business conditions are very volatile, and that impacts business growth over a period of time. So we've seen a very good round of capitalism over the last 20, 30 years. Last 4 or 5 years have not gone in that direction, and it will have an impact on multiples, equity asset class multiples, flow into equities, more risk asset classes basically. And that's what Russia-Ukraine conflict is still going on. West Asia added a Red Sea angle to it, and tariffs don't seem to set. I mean, I think these are issues which you can ignore for a certain time, but it have its economic impact sooner or later in the form of inflation, in form of global yields, what you are seeing. And that hurts.
When we translate that, so when we translate that to the index performance, just to make it simple for viewers, what are you saying? So range bound Nifty between what, 24,000, 26,000? And for how long?
Yeah, I wouldn't put a range to it, but I would say that our times where our bad times are behind us. That I can tell you backed by data, based on what we say.
And when do the good times start, Trideep? That's great. The bad times are behind us is great.
But you tell me when the West Asia conflict and some of these things come away. So basically, I think the fundamentals are better than what the share price is actually showing at the point in time. The moment the animal spirit, those global conditions get better, you will see meaningfully higher upside over a period of time. So I'm incrementally positive.
I think that's a great note to wind this up on. I think what you're telling us that we are very well poised. I mean, our internals, earnings, the way companies are sort of shaping up, businesses are shaping up, that's all well on track. We just need some of these global headwinds to lift, and then maybe we can have that animal spirit type of a market come back. So yes, definitely. We are also feeling incrementally positive after talking to you this morning, Pradeep.
Pleasure is mine.
Thank you very much. Thank you very much. Have a great Friday, and hope to connect again soon.
Likewise.
All right, there you go. You have a viewer coming in from Edelweiss Mutual Fund, Trideep Bhattacharya there, explaining how at the granular level, earnings are actually looking better than what one imagined for Q1. We just need some of these global macro issues to sort themselves out for the real big market up move to start. Speaking of the market, let's see where we are at as of now. Okay, incrementally positive. That's the story even this morning. 30 points up. So you can see there's been some volatility, some choppiness, but now once again, the market is in a bit of a lift-off mode. Mid-caps are doing quite well. The mid-cap index is up about 0.4%, which is good after 2 days of large-cap outperformance. Today we've got mid-caps taking leadership once again. The Birla Capital, Schneider Electric. I can see a lot of stocks on the upside, even HBL Engineering. By the way, all these power equipment makers, small, big, large, medium, all the power equipment stocks are doing very well today. So yeah, HBL Engineering, like I said, CG Power, Hitachi Energy, all of these stocks doing exceedingly well. NetWeb is up about 7.5%. NetWeb reported numbers, I think, earlier this week. So these are some of the stocks that are in focus. MTAR had a good P&L. Yesterday the stock was up 5%. This morning again MTAR is up 5%. So there's plenty of stock picking that's going on, must say. So let's pull up MTAR from the defense space, pull up Astra Micro from the defense space. Astra Micro, because of that HAL order, up around 10% as well. So looking good actually. It's a very vibrant mid-cap screen, one would have to say. Not bad at all. The one stock that was under pressure was Swiggy. Let's see where that is. Okay, even Swiggy's actually cut its loss. It was down 4-5% when the market opened up. Now Swiggy's down about 2-2.5%. That's what's playing out. And by the way, Eternal has been, like I've been mentioning, it's been the best performing stock this week. Pull up Eternal and see what it's doing today. Eternal is slightly negative, but then it has gained almost 11% this week. So on that note, I think it's a good time to bring in our colleague from Moneycontrol Pro to really understand what's going on with these two platform giants. I have Varsha Bang with me, who's Senior Research Analyst at Moneycontrol Pro. Varsha, great to have you with us, and we wanted you to kind of help us understand the internal trends now that we've seen numbers from Swiggy as well. Just let's start with what Swiggy has done and at what stage is the quick commerce business, because I think with both these platforms, food delivery is an established business now. The market constantly looks at scale up, growth and profitability in the quick commerce business, right?
True. Good morning, Surbhi. Thanks to me again on the show. Well, see, we know very well, as you said, that food delivery business is doing well for both the companies, and it's a cash cow for both the companies. Talking about the quick commerce segment is something where Eternal is taking the lead, as they have twice this dark stores. Whereas when we talk about Swiggy is trying to focus more towards the maturing their store productivity, translating their better inventory utilization. And again, they don't want to go that aggressive how Eternal is going in the expansion of dark stores. Whereas Swiggy is saying that they want to just focus utilizing more of the dark stores, which can give better operating leverage for the companies. As talking about the Swiggy contribution margin, which has been improved, we know very well, as this quarter. They had done the break-even in quick commerce segment, but still there is a big difference between both of them. And I think Swiggy will continue with the losses for this year also.
Okay. What about Eternal, Varsha? Eternal has seen a lot of buying, stocks back at 300 plus. How do you contrast the performance of these two giants and the trends that have come out at the end of Q1?
So I'll say... See, as we know, the Eternal is an industry leader in both the segment when it talks about the food delivery and quick commerce. The changes happened because the results which they have declared last quarter was much better, because their Blinkit NOB growth was 86%, whereas the EBITDA margin of food delivery was 5.6%. And again, when we talk about the Blinkit quick commerce adjusted EBITDA margin or contribution margin, they both are improving at that end. So Eternal has that advantage to perform better as compared to Swiggy, because it's an industry leader, as I said again, because it's an industry leader. I'll say that like.
Okay. So, Varsha, on the profitability for Instamart, where they declared that they became, the contribution margin turned positive in May. What is the read-through right now? I mean, can we safely say that Instamart is on its way to profitability, or is that still some quarters away?
No, I think there are still some quarter aways, because as even today in the latest result in Q1 FY27 results, the contribution margin is minus 0.2%. And here the management itself has told that it will be minus here and there of 100 BPS. So for quick commerce segment, for Instamart, I think the losses will be there for some quarters. As I said, it's a cash burning segment for them, and they are establishing themselves in the dark stores. As Eternal has much better, as a Blinkit has much better coverage in the market.
Now, from a valuation perspective, I'm just taking a look at where we are. Eternal is 15% away from its 52-week high. It's done well this month, 17% up. And if I look at Swiggy, let's pull both the stocks up, 1-year charts on both the stocks. Swiggy obviously has not had such a good luck. Swiggy is a good 40% off its 52-week high, though the stock saw some accumulation in the last few sessions. So, Varsha, from a valuation perspective, obviously Eternal commands better valuations, right, because of its performance. Going forward, exactly. What would you tell investors to watch out for? And what is the street view right now in terms of if someone wants to play? And from what it seems, I think Zepto's IPO is not happening. I think it's been shelved. That's what all the reports were indicating overnight. So, for investors who want to play this platform space, what should they keep in mind? And what's the upside from here?
So as you said, Zepto has been out of the race right now as they have postponed their IPOs. And again, we know there is a stiff competition going in this quick commerce segment as Amazon Now and Flipkart Minutes has also been there. But I'll prefer Eternal because Eternal continues to deliver better earnings quality. They have better infrastructure led for their for quick commerce segment. They are stronger cash generation at the food delivery segment. Again, when we talk about the margins, they are leading overall. Whereas Swiggy, I think the gap is still there and it will take time to improve their operating leverage, to come out with the dark stores availability nearby. And again, as the way the Eternal, the Blinkit has been doing advertisement to the consumers, it is more visible and the platform is also more handy.
Okay. All right, Varsha, thank you very much for joining us today and explaining how the different trends are playing out between the different businesses of both of these platform players. So, Eternal versus Swiggy, the debate is still very much on, and it seems that Eternal obviously is in the winning position, at least for now, from an investor perspective. Thanks for joining us, Varsha. Good having you on the show today. Thank you.
Thank you so much.
Okay, well, with that, let's just quickly glance back at the screen. Things looking quite good. Seeing the Nifty up about 23, 24 points, but it's really the story is more about the mid-cap market because there's plenty of stock-specific action going on. By the way, the dollar rupee has had a very smart and steady opening as well. Big pullback on the rupee. Rupee is at 95.37, so it's gained around 30 odd paise this morning as the dollar has also cooled off internationally. So good going for the Indian currency. Also, of course, the FCNRB flows are helping. Incrementally, we're positive on equities as well in terms of FPI flows. So all of that really helping the currency. And there you see 30 paise higher on the dollar rupee pair and the dollar index also, which, when we started the week towards the end of last week, it was at 101.4. So the dollar has also cooled off in the last 4-5 trading sessions. All right, with that, it's time for us to wrap up this show. But as I sign out, let's, tell you about a programming reminder. India remains an attractive market even after the recent rally. This is a word coming in from Sachi Trivedi, founder and director of Trident Capital Investments. The Moneycontrol editor-in-chief Nalin Joshi caught up with Sachi for an exclusive conversation. Now, Sachi says that India is attractive at around 20 times earnings. She cautions against FOMO-driven investing amidst Asian market volatility, and she lauds the RBI for maintaining market confidence. Watch that exclusive conversation coming up at 12 noon today. That whole show will be playing out right here on Moneycontrol. So keep it with us. And of course, more updates coming in just a while as well.
I think India is now looking very attractive at 20 times. And these markets have had a massive run. I think Sharma ji ka beta style of investing is maybe not the best idea. The volatility that you are seeing in Asia is basically, what I call as, it's a FOMO trade.